Consignor is the actual owner of the business. Consignee is only agent. He will not bear any expenses. He works only for commission. He is not expecting any profit here. There are three types of commission. What are those? Ordinary commission, deliberative commission, overriding commission. So what do you mean by accidental loss? So if any goods lost in transaction. Hello my dear students, I am Rajay sir, faculty, Department of Commerce and Management, Vidhyaashram First Grade College, MYSURU, a temple of excellence. My dear students, in today's session, I am going to handle the subject Financial Accounting 2 for second sem BCom, and the topic is Accounting for Consignment Transaction. So now let's go to the first slide. In the previous session, we were discussing the theory part of consignment. So what is the meaning of consignment? What is the meaning of consignor, consignee? What are the types of commission? These things we have discussed in the previous session. So in this session, we are going to discuss on the format of consignment. So and also working notes. So what are the how to calculate commission, how to calculate closing stock, how to calculate accidental loss or abnormal loss. These things we will discuss in the current session. Now let's go to the first topic is goods sent on consignment account. So it is invoice price means what? Billing price. So for example, goods sent, so 10 cycles he is sending into what is the invoice price, billing price. It is including of profit. So it is not cost price, it is a invoice price. We should take invoice price, we should not take cost price. So it is invoice price is 2000 rupees. That means, so total is 20,000 rupees. We should write here 20,000 rupees. Next one, two bank accounts. He already explained you, it is a risk of consignor. So any amount paid by the consignee, any amount paid by the consignor, so any expenses met or any expenses incurred to sell the product to ultimate customer, to sell the product to ultimate customers, to reach the product ultimate customers, whatever the expenses happen during the transaction, it may be insurance, freight charges paid by the consignor, paid by the consignee, has to be bear by consignor only, because consignor is the actual owner of the business. Consignee is only agent. He will not bear any expenses. He works only for commission. He is not expecting any profit here. Are you understanding? So any expenses made by or any expense happen to reach the customer, reach the goods to customer, those expenses has to be bear by consignor only, the owner of the or producer of the product only, not the consignee. Consignee is an agent. Please bear in your mind. First one, see two bank account, the expenses of consignor. What are the expenses of consignor? So we should take only, so here we should take all the expenses, but while calculating the abnormal loss or the actual cost of the product, we should only take the direct expenses, not indirect expenses or recurring expenses we should consider. So next one, so bank expenses made by consignor. So it may be freight charges, insurance, any other expenses made by the consignor or transportation charges. Next one, expenses of consignee. To consignee account, expenses of consignee. If consignee made any expenses, so for example, any testing charges will happen or any charges from the government. If he pays some taxes, if consignee pays some taxes, if consignee pays some loading and unloading charges. So any expenses, advertisement expenses made by consignee, selling commission paid by the consignee, or any taxes paid by the consignee, any fine paid by the consignee. These are all expenses paid by the consignee. Who has to bear? Consignor has to give back the amount. So when he will deduct the amount, so after selling all the products, what are the amount the consignee got, it has to send to bank account of the consignor. So while sending the amount to the consignor, consignee will deduct all the amounts and remaining amount he will send to consignor. So he will deduct whatever the expenses met by the consignee, he will deduct while sending the amount to consignor, and remaining amount he will pay to consignor. So here consignee. Next one, to consignee account. So if we commission to consignee, so if we have paid as a consignor, if I paid any commission to consignee, that amount we have to show here. Next one, if the goods are sent on cost plus profit method. So if we goods are sent on cost plus 20%. For example, if the cost is 100 plus 20% profit, that means we are sending the goods on invoice price. We are sending the goods on invoice price or cost plus profit method. Then we have to show the stock reserve. We have to show the stock reserve. Why we have to calculate the stock reserve means, see, we are not selling the goods to customer. If we sold the goods to customer, then we have to calculate invoice price. Then we have to calculate the billing price. But we are selling the goods, or we are not selling the goods, we are sending the goods. So we are sending the goods to our own agent. So we don't need any profit here. We cannot expect profit here because we are sending to our own agent to sell the goods to customer. So when the goods are sold to customer, then we need invoice price or the billing price. So when we are selling the goods to we are sending the goods to our own agent, it is not sold to ultimate customer. So we need cost price, not invoice price. So in order to calculate the cost price, what we have to do, we have to reduce the profit, whatever included in the invoice price. So here we have to, that's why. So for example, closing stock. So stock reserve on closing stock we have to show here. So closing stock, stock reserve on closing stock. So goods sent to consignee here. So stock reserve on goods sent to consignment. So goods sent on consignment. So goods sent, it is vice versa. So opposite. So debit side, goods sent. Stock reserve on goods sent in credit side. So again credit side, closing stock. Again stock reserve on, stock reserve means profit included. Stock reserve means profit included. How to exclude that? We have to remove the profit whichever has been included in the profit. That's why here the profit is included. Here we are reducing the profit in the stock reserve. We are removing the profit. Again in the closing stock also, the profit is included. Closing stock means unsold products. Unsold product is the closing stock. So here for this also the profit is included. So writing the or deducting the stock reserve here. Deducting the stock reserve, we are removing the profit. Then we will get the actual cost price of the product. So next point. Next one, commission paid. So stock reserve, next one, closing stock we have to show. Stock reserve on closing stock. Now coming to the debit side. So this is credit side. This is debit side. So coming to credit side, by consignee accounts, sales made by the consignee. So he has to pay back the amount. So whatever the sales he has made, here we have sent the goods. Goods sent to consignee. Here after selling goods, he has to give back all the amount to consignor account. So he has to pay the sales made by the consignee. So whatever the sales he has made, including profit, he will transfer the amount to consignor. So here we sent the goods, he will sell the goods and again give back the amount. Again, by accidental loss. What do you mean by accidental loss? So if any goods lost in transaction. For example, in accidental loss, so what is the price of the goods is 1000 rupees. We made into one article into, so we are sending 10 articles. We are sending 10 articles. 1000 equals to 10,000. 10,000. Out of 10,000, out of 10 articles or 10 goods or 10 bikes, 2 bikes are destroyed because of an accident. 2 bikes are destroyed. That means, so in 2 means how much? 2 bikes means 2,000. 2,000 rupees is a loss. But insurance company is giving only 80% of the loss. Insurance company is giving, this is accidental loss. This is accident. The 2,000 is the loss because of accidental loss. What do you mean by abnormal loss? So insurance company, we have done insurance for this. Insurance company is giving only 80%. So 80% means what? 800, 1,600 rupees we are getting. So we get 1,600. Our actual loss is, so total goods we sent is 10,000 rupees. Because of loss or because of accident, what is the damage happened? 2,000 rupees worth of goods damaged. But insurance, this is the accidental loss. So accidental loss. 2,000 is the accidental loss. What do you mean by abnormal loss? Abnormal means we cannot control. So here we have done insurance company. 80% of insurance is provided by the insurance company. Remaining 20%. So 80% means 1,600 rupees we will get from insurance company. This is loss. This is not the loss because we can recover this amount because of insurance company is giving the amount. This 400 rupees, we could not control this loss. So this is controllable loss, uncontrollable loss. So controllable loss means accidental loss. Uncontrollable, abnormal loss. We could not control the loss because of insurance companies only giving 80%, not 100%. This 20% is the abnormal loss. So if you have any accidental loss, write here. Next one, closing stock, we should write. Later we have to stock reserve on goods sent on this amount we have to calculate the stock reserve. Closing stock reserve here. Goods into consignment, stock reserve. So you had done in the branch account. Can you remember the branch account? We were calculating the stock reserve in the preparation of branch account in the previous semester. So like this, here also you should calculate the stock reserve. When we should calculate the stock reserve, keep this in mind. If the goods sent on invoice price or cost plus some percentage of profit, then only we should calculate the stock reserve. Otherwise, we should not calculate the stock reserve. Next point, consignee account. So who has to prepare all this account? See, keep in mind who is preparing all this account in the books of consignor. In the books of consignor, I am the owner. I have to prepare the account. Consignee is agent. Why he should prepare the account? So there is no need to prepare the accounts in the part of consignee, but in the part of consignor, because I am the owner, I am preparing all the accounts. Now consignee account. So in consignee account, so he has to debit. This is debit side. This is credit side. Here he has to send all the amount for us. Here whatever the amount here we have written here, same amount we will write here to sales. So sales made by the consignee, he will give back all the amount, or he will transfer all the amounts what he got from the sale of goods. So right here. Later he has to give some advance. So before taking the consignment agreement or before entering into consignment agreement, he has to make some safety deposit. So for example, I am sending 10 lakh rupees worth of goods. 10 lakh rupees worth of goods to consignee. So on what security I can give? On what safety I can send the goods? So consignee may get the goods and escape, isn't it? So he may run away and I may end up with loss. So what I will do? I will receive some safety deposits from the consignee in order to, for safer side, I will receive, for example, 20% of this 10 lakh rupees or 30%, some case 50% of the 10 lakh rupees I may receive the safety deposits. So this is the amount received by the, so it may be sometimes it will be received as bills receivable also. Sometimes it will be receivable as, sometimes he will pay in check. Sometimes he will give in bills receivable. Bills, BR, bills receivable. So anything, we will write the amount. So he has to send the, for example, he has made sales worth of rupees 10 lakh rupees. He has made sales worth of rupees 10 lakh rupees. 1 lakh rupees he has made the, 1 lakh rupees he has made the safety deposit with me. Next one, he will deduct his commission. His commission is, let's assume 50,000 rupees is commission. He will deduct the commission. Next one, his expenses. Already we have discussed here. So consignee's expenses. So what are the amount we got in consignee expenses to consignee account? Commission made by the consignee. Same amount we will write here. So all the commission, for example, he may paid for salary, paid for advertisement, paid as a sales commission, paid as a freight charges, outright taxes to the government. All the expenses made by the consignee, because he is not the owner until I am remembering you. So he is not the owner of the asset. So he just receive commission. So any expenses made by him, he will paid by the consignor only. That's why he will deduct, if for example, let's assume 10,000 rupees his expenses while selling the goods. So after deducting all the amounts here, 1 lakh, 1 lakh 50, 1 lakh 60,000 rupees, total sales made is 10 lakh rupees. He has to send 10 lakh rupees to us. But before sending 10 lakh rupees, he will deduct 1 lakh rupees his deposit and 50,000 rupees his commission and 10,000 rupees is the expenses made by him to while sending the goods. So remaining amount out of 10 lakh rupees, so minus 1 lakh 60,000, deduct this. So remaining 8 lakh 40,000. So 8 lakh 40,000 he has to give back our money. He has to send back the amount to the consignor account. So the total 10 lakh, 10 lakh. Total 10 lakh and 10 lakh. So total sales made by consignee 10 lakh. So out of that he will deduct his advance payment and his commission and his expenses. Remaining amount he will pay back to consignor. He will pay back to consignor. Next point, accidental loss account. Accidental loss account. So I already explained you, total loss is the accidental loss. Abnormal means we could not control the loss is For example, already explained now here, what is our loss? 2000 rupees our accidental loss. Because of accident, we got loss. What is the insurance company is providing? 1600. Loss we could not control, abnormal loss 400, like this. So for example, I'll write here. So total consignment to place account, total accidental loss is 2000 rupees, I'll write here. Insurance company is giving only 1600 rupees. So right here, I could recover 1600 rupees. How much I could not recover? How much I could not recover? How much I could not control is 400 rupees. 400 abnormal loss account. So remaining 2000 tally. Our understanding easy, very easy. Very easy concept. Next one, goods sent on consignment account. So what are we have sent goods sent on place account. This amount we should write. So here what we write the amount sent, same amount right here to consignment to place account. Remaining stock reserve. So calculate the stock reserve here. Remaining trading means still it is in business only. Now let's go to the working note. First we have to calculate the calculation of total sales. So here we do cash sales also. We will do credit sales also. Or usually the consignor expects to do credit sale because he will get continuous flow of fund throughout the year, and also he will get interest on that, isn't it? So that's why always consignor expects or encourages consignor to do credit sales instead of cash sales. So add both the sales, cash sales. For example, I sent 10 goods. Out of 10 goods, 5 goods or 5 bikes, 5 cycles, he did for cash. He sold for cash. Remaining 5 for credit. So add both the amount, you will get total sales. Next point, calculation of accidental loss. Total cost of the goods lost. For example, what is the actual loss? I sent 10 goods. So out of 10, 8 goods he sold. So out of I sent total goods, 8 goods he sold. Remaining 2 is because of accident he lost the products. So you write the actual worth of 2 goods. Now worth of 2 goods and add the expense of consignor. Here while adding, we should take only direct expenses. So recurring expenses I will show you here. So we should show only, so this freight, carriage, insurance, loading, unloading and insurance. This only expenses, direct expenses we should show here. So we should not show indirect salesman, salary, advertising, printing and over warehouse and general expenses. We should not show these expenses. Only show direct, only take direct expenses while adding the expense of consignor here. Next one, accidental loss. We get the accidental loss amount. Next one, recovered from insurance company. Did recover from insurance company. So already explained, here, what is the amount we recovered from insurance company? 1600 rupees. So at recover from insurance company, get this amount. What are the amount we'll get? That is the abnormal loss. Next point, calculation of closing stock. So how to calculate closing stock? Here, total goods sent. What is the total goods sent? I sent 10 goods. Out of 10 goods, 2 goods lost in transaction. Because of accident, 2 goods damaged. Leave 2 goods. Delete this. So I'll get 8. 8 goods still we can sell. Next one, goods in transit. Out of 8, I will send the goods in batch wise. Sometimes I will send the goods in. All the times you will not expect this type of problems. Sometimes if they give like this, we have to do these types of calculation. Okay. So out of 8, 4 only reach the consignee. Remaining 4 still in transportation. Still we are, for example, for Delhi we are sending the goods. 4 cars we have sent the 4 cars from here. But remaining 4 cars we still it is in transportation. So transit remaining, let's deduct 2 cars, still 8 cars. What is unsold? Out of 6 what he received, he could sell 4 cars. Remaining 2 cars he could not sell. So he sold his 4 cars. So remaining 2 cars we could not sell, still in closing stock we could not sell. So total cars sent is 10 cars I sent to Delhi. Out of 10, 2 cars because of damage, because of accident, it lost in accident. Next one, still in transaction. Still it is in transaction. Still it is in transportation. The lorry, in which lorry I sent the cars or sent the products, still it is in transaction only. Still it is in transportation. It is not reached the Delhi. So out of 8 cars, 2 cars it is not reached the consignee. only 6 car, he got only 6 car. Out of 6, he sold 4 cars, 2 cars is not sold. Next one, calculation of value of closing stock. So for this, we have to calculate only, we should take 6 cars, not these 2 cars and these 2 cars. So take cost of goods, so cost of 6 cars plus expenses of consignor, any expenses made by consignor, any expenses made by consignee. Now total of, so what is the closing stock? 2 cars is the closing stock. Only we should take expenses for 2 cars, expenses of 2 cars for the consignor side, expenses of 2 cars for the consignee side. That is the value of closing stock. Now let's go to the next slide, is calculation of commission. So already I told you there are 3 types of commission. What are those? Ordinary commission, del creditor commission, overriding commission. So ordinary commission means bulk commission. For example, if you sell 10 car, I will give 5% discount. What do you mean by del creditor? If you sell on credit basis, extra commission I will give. If the consignee sell the goods on credit basis, you will get extra commission because consignor will get the interest on credit sale. Next one, extraordinary commission or overriding commission. If the consignee sell, or I will give the target to sell 10 car, he will sell 15 cars. So whatever the extra sales he has done, I will give extra commission, that is overriding commission. So add all the commission, right? Commission side. Next one, calculation of closing stock. So this is the, we have to calculate the closing stock on goods and turn, consignment and closing stock. On this we have to calculate the closing stock reserve on closing stock. So like this we have to prepare the problem. First we do all the working note, later we will come to the problem. These are the problems. Now next one, direct expenses and indirect expenses. Already I explained you what is the direct expenses. So only while calculating working note, we should consider direct and indirect expenses or recurring expenses. While doing problem, take all the expenses. Don't leave any expense. While doing problem, take all the expenses. But while calculating the abnormal loss and while calculating the working note, take only direct expenses, leave indirect expenses or these expenses, which is salesman salary, advertisement, printing and warehouse. While doing the problem, we should consider all the expenses. See in the problem like this. See in the problem, take all the expenses. But while calculating working note, so while calculating expenses of consignor, expenses of consignee, take only direct expenses, don't take indirect expenses. Keep this in mind. So these are the indirect expenses, salesman salary, advertisement, printing, warehouse and general charges. These are all the indirect expenses. These are all the direct expenses, freight, carriage, insurance, recurring expenses. We will call it as a recurring expenses. So okay, loading, quarter means tax on goods. Next one, insurance on transit. These are all the direct expenses. These are all the indirect expenses. So in the next session, we are going to discuss some problems. So these are all 15 marks problem, very important problem. Please prepare this for examination point of view. Very important and very easy and interesting topics. Till then, thank you so much. Let's meet in the next session.